We know we have a couple of people joining us, and the list is growing and increasing. So we're looking at those numbers now, but welcome. We're just going to go ahead and jump right in because we have a lot of content to cover. But I do want to welcome you all to the first webinar. So just a couple of things we want to go ahead and address before we get started on today's topic. You should have received an email from me like 20 minutes ago regarding, this week and, some important information. Obviously, moving forward, these emails will go out on Monday afternoon. And then webinars, I will, in addition to that being available on SLEIEd, I will also be sending those links to you. Make sure to put in the password and look out for that password. It should be the same every week. And then we also sent you the PDF slides from this weekend, so please make sure to take a look at that and revise your notes. But that was sent in the email as promised. And pictures from the weekend will be available next week, and we will send that link to you as well. And then finally, the mentor profile packets have been slightly updated, so make sure to review those from the email I just sent. But I would like to introduce you to Teek Chapa in person. This is Teek Chapa, and he is the Director of External Relations, and I'll just hand it over to him to kind of speak to you and say hi and share a couple things.
Yeah, excited to chat with all of you today. And sorry I missed you this weekend at kickoff. I'll absolutely be there at closing, and I'll be a big part of your experience, especially in regards to the one-on-ones that we set up with investors and really helping you prepare yourself, whether you're raising or not, but really helping you figure out what is the narrative of your business as you grow, how are you internally really building the kind of financials, and also then external documents to really share the story of your business. So that's embedded in the course with your one-pager, which you'll have 2 chances to do, and next week I think you'll get your first start with the first version. And then part of your final deliverable, your final assignment, is a deck, a PowerPoint presentation giving an overview of your business and where you're going. So excited to meet you here. Teek, again, I've had the chance to be a part of the team since the very beginning. So you are and I'll say you are my 5th cohort. And every cohort is different. The feeling that we got as a team, your energy, of course, unbelievable. You also, as you have heard many times, in terms of your size of your businesses and what you've stated as your desires to grow from regional to statewide, from statewide to national, from national to international, we're excited, and we're excited to be a part of helping you do that. In terms of your assignments, you had your first due this morning, and so excited to get you, as you get comfortable on platform, submitting everything through there. You had Aja and Dina and Alice helping present that. And as you have questions, of course, use Aja in the platform specifically for questions there. And again, you started with clusterfugs with a G, talked about mindset and many other things. So excited for that today. Before Melody introduces our speaker today, I'll just give you again an overview for all our webinars in the webinar series. The themes in the first half of the series are about things like today around boards and advisory boards and board development. Know that all the speakers, including ours today, are excited, love to help and support you. And so the themes, again, the first half of the webinar series, things kind of that are specific to entrepreneurs like yourselves and that are general enough that I think all of you have a lot to learn from them. The second half of our webinar series specifically will be centered around capital. You'll have investors from different, representing different types of capital and domains, speaking to specifically what they need to see, especially what they have seen from people they've invested in. So excited to be part of this journey with you. I'm excited to meet you in person on December 2nd, which will come much sooner than we think. And I'll hand it off to Melody to introduce our speaker today.
Awesome. Thank you, Teek. So this is our first webinar. So as you have not before, but as I mentioned in the weekend, please send your questions in the chat box, and we will try to get to those, throughout, try to create some type of dialogue. But if not, we will reserve time at the end for Q&A. Remember, we can't see you, but you can obviously see and hear us. So make sure to utilize the chat box. So we are excited, Alicia, to have you join us. And so we're just so happy to introduce her today. She has supported our program in many different ways, obviously including hosting these amazing webinars. And she is first and foremost a champion for entrepreneurs and is really excited to share with you today. She is currently founder and CEO of Pantegrion. I can never say this. Pantegrion Capital. Same thing happened last time. An angel investment vehicle focused on seed and early stage investments. She's on the board of the New York Angels and also serves as an instructor in Steve Blank's Lean Launchpad course at Columbia University. She is often on CNBC's Power Pitch and MSNBC's Your Business. We will be sure to send you some of those links and those recorded sessions, which have great advice. And Alicia has worked with firms of all sizes. So prior to Pantegrion, she was the first employee and a managing director and CAO of a multi-billion-dollar private equity firm. So without further ado, Alicia will be sharing and taking questions, and we will make sure to answer any of those along the way and at the end, but we're just really happy to have you here. So take it away.
Awesome. Well, thank you so much. This is so much fun for me to get involved in this program because all the times in the past, everyone has been really responsive and really appreciative and just so sincere about wanting their businesses to grow. So, so I'm really excited to do this yet again. I hope it continues. And I, this time, was asked to speak specifically on advisory boards. In the past, I've kind of gone broadly across so many different areas related to capital raising and advisory boards, but today we're going to kind of like hone in specifically on that topic. And just to give you a sense of what I hope to cover during the time that we have together, I want to talk a little bit about what you can ask an advisory board for, right? So just to give some context of like what kind of value can you get out of it? Just to, and some of you may already know what value an advisory board brings, but for those of you that don't, let's start there. Then I want to talk a little bit about how do you even compensate these people, right? Like how does the tech world compensate these people? How do non-tech people compensate advisory board members? If you give equity for these positions, how do you vest it over time? What are your options? So I'm going to talk through the kind of material nature of advisory board plans. I also want to talk through how you think about structuring an advisory board holistically. So I've gone through this now with a lot of my portfolio companies, and it really does depend on your specific company. So we'll talk through some of the questions that you should be asking yourself if this is something that you want to pursue. I also thought ahead and I was thinking, well, what kind of resources can I share with you? And I think what I'll probably do is after this is over, I'll send some links, like a sample advisory board agreement, so you guys could check out what that looks like a template for that. I've also written some Inc. articles, which I think you guys have the links to all my Inc. articles, but I'll send that again because there is one specifically that recaps what you can ask an advisory board for. And then I'll talk about the differences with advisory boards versus board of directors, because oftentimes people don't necessarily understand the different functions and also legal implications. And sometimes you can have advisory board members that then go on to be part of your board. So to complicate matters further, there can be overlap. So we'll talk about that too. And if we have time in the end, I know that Teak had wanted me to cover some basics around funding, which I'll plan on doing too. And I definitely want to talk specifically about some extra tips for women entrepreneurs, people of color, and how advisory boards can really help you in ways that maybe you haven't thought through yet, or maybe like that will give you that extra advantage if you're dealing with bias, quite frankly, in the environment. So that's the general plan. And I have the chat box up. I may speak and not see questions as they come up. I promise we'll get to it in the end. And then just so I know for timing, so I'm based on New York time right now. So it's about, let's say 7:12. So should I plan on speaking until what, like 8, or should I stop before that with questions? What's the plan?
That sounds good. 10 till, we have this until, we're here until 5:15 after the hour after 8 for your time.
Okay, it may not take that long, but I'll just make sure that I'll maybe stop a little bit before that if we need it. So that's the game plan. And was there anything else you guys wanted me to cover on that front? Is that like a good outline for what might be helpful, or any other feedback?
Yeah, and I know one thing quick thing that you've talked about before is, and we know many of our businesses just haven't necessarily given up ownership to then have a board of directors, and haven't really formalized an advisory board. So even as you mentioned, or already mentioned you would speak to, but just the why and really the huge value that you've seen from the companies that you've helped build.
Okay, so we'll get to I think we'll get to the value. That'll be the big part of it. But let me first, just to avoid any confusion, let me talk first about the difference between a formal board and an advisory board, because I feel like that's something that you have to understand before you dig into any particular area, and sometimes there's confusion amongst the two. So, and if everybody already knows the difference, then this will just be a quick recap. But basically, a formal board has a fiduciary responsibility to vote on matters that are in the best interests of the shareholders, right? So when you think of public companies out there, any big publicly traded company like a GE or a Nike, they all have formal boards, right? These are people that are appointed to the boards, or maybe elected by the existing board. They have votes on like compensation plans, on major structurings, and those board members are all voting, right? And if they aren't doing that, then it's actually a legal liability, right? I mean, it's a very serious kind of formal structured way of interacting, and you take minutes in those meetings, and there's a lot of documentation. So the formal board is often formed when a company first takes in outside funding. So let's say that like a venture capitalist comes in and they lead a funding round. If you don't already have a board, they will probably ask you to create a formal board. And they'll probably then add themselves as one of your board members, because they want that like legal, fiduciary responsibility. And they want to be able to like, if you look in the press at Uber, for example, right? Like the board was the one that stepped in and said, Travis, we don't want you in that role anymore, right? Like, so that's the formal board that everyone kind of talks about in the press. The advisory board that I'm talking about today is not like that in terms of like the legal implications. They have no power to like overthrow an entrepreneur or anything like that. It's not forced upon you to form. Like the advisory board is really your own decision to set it up. You choose the people. You decide, who you choose, how long you work with them, what that relationship is like, their value added to you. It's totally within your control, and it's all about forming the advisory board to help you with your business. And so, if the board member, an advisory board member doesn't work out, you don't have to work with them. It's as simple as that. But it is separate from the formal board, and I just want everyone to understand that so that there's no confusion around like minutes or shareholder or it's nothing related to the formal structure. So an advisory board, let's start out with the value, because I know Teek said that's probably one of the biggest things we should dig into here. So why even form an advisory board? I think a lot of people who may not be familiar with like what you could even ask an advisory board for, they just kind of default to asking like a big CEO name to be part of their advisory board, but they don't really know what they could ask that person for, right? And so that's kind of the base of what I want to start talking about, is because if you create an advisory board, and if you're either paying these people through equity or cash, like you should get as much value as possible from these advisory board members. So, and like I said, I'll follow up and I'll send an Inc. article where I wrote about this, but let's talk through some of the things that you can ask of them. And I'll say this from my own personal experience, because I've served on a ton of advisory boards. I've also served on formal boards. And as a side note, I prefer serving on advisory boards because I don't personally have that legal responsibility added onto it. And I love just being on an advisory board where I feel like I can help the entrepreneur as much as possible. Mm-hmm. So what can you ask an advisory board for? So in no particular order of preference, you know, when you're an entrepreneur, and I'm preaching to the choir here, you're busy all the time, you know, you're dealing with fire drills, like you don't necessarily have the time to sit and read the news and, you know, scan 1,000 articles a day. And so one thing that I always do as an advisory board member is like, just look out for news for my portfolio companies. I send them multiple articles anytime I see something in the news about, you know, a potential strategic partner, maybe a new venture firm that started, or you know, something related to competitors in their region or whatever. You can tell an advisory board member like, hey, look out for, you know, something in the news, or any, you know, anybody that you meet that you think might be of interest to me. Like, I'm always open for those introductions. It sounds like a basic request, but the truth is like, once they have it in the back of their mind, you know, they could send you like a really interesting article that generates an idea for a new business line. You just don't know. So sending news is one thing. Another thing is attending meetings. And so, you know, like I said earlier, a lot of times when you're forming an advisory board, and we'll get into thinking about all the people you could contact in a second, but a lot of times you can recruit people who are very senior, very like have gravitas, CEOs, you know, they could join your advisory board. And if you're maybe a younger entrepreneur, or even if maybe, you know, you are a sole entrepreneur and you want to, like, you have an important meeting and you want to project some kind of sense of team, you can ask advisory board members to attend meetings with you. So I've done that in the past with some of my portfolio companies where I've been on their advisory board, and I had a solo founder and she was like, look, I've got a big meeting at Condé Nast headquarters. Can you come with me? And I'm like, sure. You know, and I think that was really helpful to her to be like, here's one of my advisory board members, like she's involved in all my strategic decisions, and like we went as a team. So that might be something to think about. Another thing is that you can leverage some advisory board members to recruit others. So let's say that like in your whole network, there's one person that you're like, this is the type of senior person, but I don't know other ones necessarily that are like of that caliber. Well, you could ask your advisory board member to help you recruit other advisory board members out of their networks, and you know, provided that you tell them kind of what you're looking for, there's no reason why they can't help you do that. And with respect to your business generally, you know, you can ask them if you're recruiting members of your own team, if you have questions around vendors that you are considering using, if you have questions around potential strategic partners, like they can be a resource for you in all of those areas. They can absolutely help fundraise. So it depends on the person's background, but let's say that if you're in a position where as an entrepreneur, you anticipate fundraising at a later point in time, a good advisory board member could be someone who comes from the investment world or spent time in the investment world in the past, so that they can sit down with you and say, you know, let's do your pitch deck together. Let me introduce you to other investors I know in the investment world that might be a fit for you. Let me, you know, organize a meeting with a lot of my friends in the investment space, and we'll do diligence together, and I'll be the one that kind of herds the cats and brings, you know, all of the investors into a conference call. Sometimes if they're a part of angel groups, they could even help write an investment memo for you. So, you know, we'll get into holistically all the different types of profiles you could consider, but if that is part of one of your goals to eventually fundraise to grow your business, an advisory board member with that background could be very useful to you. And I mentioned this earlier, not just in terms of recruiting, but the advisory board members, probably the biggest way they can be of help to you is to make introductions, right? So in the course of your business, you could have things come up where you're like, I'm really looking for a contact at PayPal. I'm really looking for a contact with this potential client. I'm really looking for, you know, a contact at this venture capital firm, or I need to get in touch with so-and-so in the press because I'm looking for this type of coverage. Like, those are valid requests to ask of your advisory board members, especially if that's their industry background. So that's something to think about too, is like, who are all the people that you're looking to meet to help your business go to the next level, and how can you ask advisory board members for their help on making these introductions. I mentioned this earlier in terms of strategic advice. You know, you guys, and I'm again preaching to the choir, but you go through so many ups and downs in your business, highs and lows, and you know, having an advisory board, especially if you're a solo founder, is super helpful, because sometimes you just need to talk to someone through what you're going through, and strategic decisions, and getting like a separate perspective that's maybe a little less biased when you're in like the thick of making that very important decision. So that's definitely a big area, and it goes across all the big strategic things that you're doing. I mentioned introductions to the press, but I think in general, you know, helping you get press or attend conferences, or, you know, getting your name out there as a thought leader. A lot of times the advisory board members that you might want to attract are pretty senior and already have built a brand, and, you know, they're out there. Like, I can say myself, I'm speaking like 50 times this year, and like, I'm always thinking, if I go to a conference, like, can I get a free space for my entrepreneurs? Can I get them a slot on the panel? If I meet a journalist and they want to quote me on something, like, can I leverage that relationship for my portfolio companies or for the advisory boards that I serve on? So that's something to think about. And part of, you know, the onus is on you to think about, okay, have I looked through all their LinkedIn contacts? Who do they know? Do they know people in the press, and, you know, or whatever other areas that might interest you that pop out from those contacts? And just saying, like, you know, are these potential introductions that you could make? How well do you know this person? And so thinking through, you know, how can you leverage what they've built, and maybe have them open doors for you in that respect. And then finally, serving as a reference. And this is, of course, not a comprehensive list, but this is just to give you some sense. But serving as a reference, you know, let's say that you are in the middle of a fundraise, you're trying to close a big client, or, you know, you're trying to get this key employee to join your company. Again, having the ability to say, look, this great person's on my advisory board, why don't you chat with them? They've been working with me for, you know, 6+ months now. They can tell you what I'm like, you know, pros and cons. And especially, again, if you're a solo founder, that can be really, really helpful, you know, very influential to have this senior person speak on your behalf. And so, you know, this is, and as Teek mentioned, you know, this is a really good starting point for us to talk about advisory boards, because I think one of the big mistakes that a lot of entrepreneurs make when they form these boards is that they say, well, you know, I just want to get the biggest name possible, and I want to put them in my pitch deck, and this is going to like help me with funding. But, you know, there are two downfalls to that. One is that if you aren't really making use of them, and you're not asking for all these things, and you're basically just giving up equity or, you know, cash, whatever that you're paying them for these roles. And so you're kind of hurting yourself. But the second thing is that if you only are using their name in your pitch deck, or, you know, you're just doing it to throw the name around, like, any good investor would see through that. And it almost works against you if they find out that, you know, you just kind of added them just for the sake of show, but you're not really creating some kind of relationship with them. They can't really speak on your behalf. They don't really know you. So those are all the things that I would think about. And I think and so the next thing is we'll talk a bit about holistically how you think about forming a board. But, you know, that's what I would say is going into any of these conversations, assuming that you find someone that you might want to recruit for your advisory board. Like, these are things where you can have this conversation, like, could you help me in this area? Could you not? Like, you know, you should speak in a very transparent way about what your expectations are. Because I think if they come back to you and they tell you, like, no, I'm not willing to help you with a fundraise, or no, I don't want to make those introductions to the press, or I would feel uncomfortable adding you to a conference or whatever, well, then it's not worth your equity, right? Or it's not worth whatever payment. And so being able to be knowledgeable about what your ask is for them and being transparent about that from the start before you ever agree to anything is so smart, right? Because they should give you their word, and and we'll talk a bit about how you document these agreements too. But it's really important that you set those expectations that they will absolutely be working for the equity. And I'll say this as a side note too. Having someone ask you to be on their advisory board is a real honor, like that is, and especially for people who are executives and they had advisory board roles before, they would love to put that on their resume and say like, yes, I've, helped a startup and they wanted my advice. And so it should, it really should feel like it's a fair trade, where I know, and sometimes when you're fundraising, it feels like you're pitching and you get 100 no's and everything like that. It shouldn't be like that in the advisory board world, because it really is an honor to say that you value someone's advice so much and you want to give them some kind of equity in your company for their time. And I think a lot of times having the conversation about potentially joining your advisory board is, that's a great place to also get it, it's a great start of a relationship to also get advice. So like, let's say that you targeted 5 or 6 people that you thought could potentially be on your advisory board. And then maybe you meet with them and you decided maybe only 2 or 3 of them felt like a good fit for you. Well, you probably still learned a lot from those meetings with the other people, right? So like, even just building an advisory board and having the opportunity to meet with senior people and explore that fit from both your perspective and their perspective is another great way for you to like kind of reach out to very senior influential people and learn from them too. So I would say think about that in the same way that if you ever had a regular job and you went through the process of meeting with all these different firms, like some may not have been a fit, but you probably learned a fair amount about those companies and the culture, and maybe some interesting contacts along the way. So anyway, that's the overview of advisory boards on that front. And so the next thing I want to do is talk a little bit about how you think about the formation of an advisory board, again, holistically. And this really does depend on the company. And I've gone through this process now with a number of my portfolio companies too. It really should be determined first and foremost by what your voids are in your company, right? So let me just give you some examples. And I think you guys, I think the company, the one that I invested in, Everwaters, where the head of the company is Adrian, Latino. Yeah, so he's like, he's a younger guy, and we walked through this whole process, and it's a great example because it's like, we went through it fairly recently, but they, just for context, it's a water filtration company, right? Everyone kind of gets their arms around what that does. It's a consumer product, and they do sales in Africa, and they're just picking up a lot of momentum now. But when we were first thinking about the company and the advisory board, we thought, okay, here are 2 guys who were like a year or 2 out of school. Having like very senior advisory board members is going to be really helpful to them to project gravitas. And so then we mapped out about 10 main areas that we thought would be target areas for the company. So for example, and again, this is totally, could be totally different from any of your companies, but we thought, okay, well, water filtration, what's relevant, right? Maybe we need a senior advisor from the government sector, someone who knows how to, has contacts in the senior levels of the government if we need to work with them for like, large contracts, government contracts. So we recruited a woman who had worked with Mrs. Obama in the Drink Water campaign, and she was able to give really good advice about how to work with government organizations. The next one we thought of is someone with really in-depth consumer experience, because we thought, well, if they grow this company and if at one point they want to have the company acquired, having someone give them counsel around, what does Unilever do on the acquisition side, or like how does Clorox think about smaller companies in these markets? So we found someone who had worked at both of those companies, and it was really helpful for them to get a better sense of like, how do these big consumer companies operate? They also thought about in Africa in particular, and I'm not saying anything that's proprietary to them, but they also thought about, you know, delivery, like on the ground delivery. The whole thing in Africa is mobile commerce. You know, people are transacting with their phones in more advanced ways than in a lot of other parts of the world. And so they were thinking, okay, maybe we need someone from a tech perspective that's going to give us developer advice on how we build out a mobile platform. We talked about people with fundraising backgrounds. So if they think ahead to, you know, another raise where they bring in VC money, maybe they want someone that's like more significant in that area. So, you know, you get the point. Those were a few examples just to kind of give you more specifics, but I will extrapolate and give you some other examples that are relevant to different types of companies. So I've had companies that have also added people with legal backgrounds to their advisory boards because maybe they were in the early stages where they weren't really able to pay a lot of money to lawyers. I mean, whoever is, but it was particularly hard on them. And so, you know, they basically contacted someone and asked them to, you know, kind of work for equity on the advisory board and give legal advice. And they did a lot of the early contract work before they could afford someone that was, you know, a bit more focused on the industry. I've had people that recruited advisory board members from equity research. So think about that. Like, let's say you have a food company and maybe you want someone who covers major food companies and they can give you very strong industry reports, and they can kind of walk you through what's going on with commodity prices and major macro moves. So, you know, you can really get creative about it. But I think, again, coming back to the core issue is that advisory boards are really set up to help you fill voids within your company, right? And so if you're not able to hire a full-time tech person yet, then maybe that's, you know, someone for your advisory board. If you know, need more legal help in the early stages where you can't pay the cash for it, that's another great idea. If there's, you know, some of the things that I mentioned, like maybe you need someone's help building financial models, maybe that's someone. Maybe you need people from industry. Maybe you need someone that like specifically knows about working with non-government organizations or charities, or, you know, whatever it is. I would say the first step is to sit down and say, like, let me just make a list of all the people that I would love to meet. You know, what are the big areas that I need help on? Maybe I can't afford a full-time employee in this area yet, but like that should give you some structure to start prioritizing, okay, of all the things that I listed, of all the voids that I have, of all the things that I want to meet, that I want to add to my company, but where can I focus in for the top 2 or 3 needs, and maybe bring in someone who's like a C-level executive. And then maybe maybe you then contact a few different people and you know, start exploring it with them. Another good example would be someone who's been in the same your shoes, but is more advanced in their company growth, right? So maybe you want to find someone that is retired but grew their company and scaled it to a very large level, and then maybe they sold it and they're looking to give back. You know, and so maybe it'd be very fulfilling for them to mentor you and to give their time and give you advice. And that's very valuable to you too. So anyway, I can't really go into like a comprehensive thing because it all depends on the company and whatever your voids are, but that should give you some sense of like, what can I ask them for? Like, how can they really be helpful to me? How can I get more value out of just saying that they're on my advisory board? Because if you are giving them equity in your company or you're paying them cash, like, you need to be asking them for lots of things, and you need to be communicating those expectations before you ever go into the arrangement with them. And then, you know, if you are going to build one, think about all the ways that you can really get your business to the next level by kind of like supplementing what you have in your company with all these great outside resources and bits of advice, right? So that's what I would say is like, give some thought to that. The next thing I want to do is talk a bit about how are these agreements even structured, right? Like, because it's one thing to be like, yeah, we're going to build a board. Then it's like, well, what do we pay them? And what do you mean when you say equity? And like, what if I don't give out equity in my company? And, you know, all of these things. So let's talk about that. First, I will say that on occasion, I have seen non-paid advisory board roles, meaning that people will do it on a volunteer basis. I think if you're really going to ask someone for a lot of time and help, should I be reading these questions too as we go, or should we?
If you want to go through them, I mean, they're some good questions here by.
What I'll do, I think I'll do it at the end because I can see them coming in. Okay. Because you know what, I was confused because the Q&A came up, but there's nothing, it's more on the chat. Okay. All right, so I'll come back to that.
Cool.
So yeah, I mean, it is, sometimes you do have non-paid advisory board roles. I would say that that's probably going to happen more in the nonprofit areas, right? So like if a charity or like a nonprofit organization asks you to join their advisory board, it's usually because they want a donation from you and they're not going to pay you for it, right? But if you are a for-profit company, it's pretty standard for you to think through the compensation part of it. And I think it's fair too, because you're asking them for their time to help you make more money, essentially. And so it's, they should be tied to that too. It's the same kind of incentive, right? So if you are, and I know we talked about this before, if you're in the bucket where, maybe you're one of the 15 or so companies in the class that's more on the tech side, then it's probably more likely that you're going to be thinking about equity-based compensation plans, right? If you're more on the non-tech side, if you're more of the, one of the 50 or so companies that's more brick and mortar, then the equity plan may not make as much sense because maybe, you're just looking to make tons of cash in your business and that's, the plan is never to sell it or anything like that. And so equity really doesn't play a part in it. So I think that you have to think about it depending on which bucket you're in. If you're in the tech bucket, and I have to say that's what I see more of, just because in my investment world, it's more of the highly scalable businesses. Okay. So in equity, with equity, the way that these are structured is it's usually equity that comes out of like a broader employee options pool. And I don't know if you guys have talked about that yet in the program, but like if you're a high growth company, before you bring in outside investors, what they'll often do is have you allocate, I don't know, 10, 15, 20% of your company to an employee's option plan. It doesn't mean that you lose that equity. It's still yours, but you set it aside so that as your company grows and scales, you're giving, you have the ability to give your employees equity and incentivize them to like grow, be part of your company, right? So, so you would basically use equity from like an employee options pool, or even if you didn't have that set up, it would just be the equity in the company. A classic amount is 0.25%, right? So and just as an aside, you guys know I had started an initiative earlier this year to help women entrepreneurs build robust advisory boards, and that was the 0.25 initiative that I started, and that's named after the 0.25% that an advisor often gets when they join a startup's board. So if you think about that, and I know I don't want to get too much into the weeds with this, but if you think about that, let's say that you were taking a step back. Let's say that you're, a tech company. You want to use equity to build an advisory board. You want to build a board of maybe 8 different people. Let's say that you gave each person of these like 8 kick-ass C-level people 0.25% for like a year or so of their time. And that's the equity that you give each person. That's probably, a couple of percent of your company. And so you have to think about it in terms of like, could I basically recruit, 8 amazing C-level type people? And would they provide, the value for me to give up, let's say it is 2% or so of the company to really get me to the next level? I think in most cases, without a doubt, like I see portfolio companies where they'll bring on an advisory board member and the whole responsibility of some member is just to introduce them to new clients. And that can pay for itself. But, you have to be mindful about that. And oftentimes, you have the equity vest over a period of time. So you would go into a contract with someone where you'd say, maybe I pay you 0.25% of, in equity for this role. I'm asking for a year of your time, and that'll vest over a year. Sometimes the contracts can be a few years, although I found that as time has passed, and companies develop so quickly now. I feel like 3 years seems like a long time. I would almost prefer the contracts be less, because it gives the entrepreneur the ability to say, like, at the end of the year, are these the same advisors that are going to be helpful to me now, or do I need a different type of set, right? So you may decide at the end of the year, like, well, I don't need this lawyer advisor any longer, but now I need someone who can help me with strategic introductions with clients, or you know what I mean? So it depends. But anyway, that's kind of generally how you think about it. And for the non-tech companies out there, if the equity component doesn't make as much sense, then I would just try to come to some agreement with the potential advisor on some kind of cash component that makes sense for the relationship. And so this is probably a nice segue to talk about the timing of being an advisor. But like, for example, if you said, okay, I want to have this advisor compensated by cash, and I'm going to ask them for an hour of their time a month. Well, what's their hour worth? You know, are you just, maybe you're agreeing to pay them $500 a month, and then, you know, that's it, because the equity, I'm just throwing that out there. You know, it depends on the person, how senior they are, how much value you think you're going to get out of them. But, you know, you have to kind of think through, if it is cash, how valuable is that advice? What is their time worth? How much time are you asking for? And then try to propose something that makes sense for both of you. So those are the compensation fronts. And like I said, what I will do is send a sample contract that's available online. It's called, I think it's from the Founders Institute, that gives you a good boilerplate template of like what an advisory agreement looks like. This is more on the equity side, of course. But that way you can just read it and just be like, oh, I get it. Like, I kind of understand how this is laid out, or, you know, you don't necessarily have to follow it if you don't want, but at least you get a sense for like what it looks like, because you do, again, even though it's not a formal board, you do document it, because if you're giving away equity in your company for this advice or this strategic help, like, you want that documented. You never want someone claiming later that it was a different amount, or, you know, that you weren't explicit about what you were asking for, like that. It doesn't have to, you know, usually these contracts are like, sometimes there's a page, sometimes they're 2 or 3 pages, but this is not heavy stuff. Like, this is pretty standard boilerplate, fill in, you know, the time of the commitment, the amount of equity, the vesting plan, and that's usually pretty much it. So let's also talk about, we're close on time. Let's also talk a little bit about the type of interaction and timing. This, again, is totally up to you, right? So you as an entrepreneur, like, again, legally, you're not forced to have an advisory board. This is only for you to do if you feel like this is helpful for your company. And when you do engage an advisory board member, you know, it's all about you individually working with them on what kind of time arrangement works best for both of you. A lot of times the advisor will tell you, especially if they're super senior, you know, because they have their own views on that. But the advisory board members are often interacting directly with you. It's a personal relationship you have with them. On one hand of the spectrum, some may come to you and say, look, you only get 1 hour of my time a month. I had a advisory board member for one of my portfolio companies who was a senior woman at Google, and she was like, you get 1 hour a month at the Harvard Business Club for breakfast, and that's it. And they were like, we will take that 1 hour because you're awesome. But I, you know, on my advisory boards, like, I'm a little less stringent than that, because I don't want to miss out on anything. So I'm like, email me anytime, we'll jump on the phone, like, it should be fluid. Every time I see news, I'll send it to you, or, you know, and so, like, I like that, because I just don't feel like it's, you know, it just, I don't know, I don't want it to feel so formal, and I feel like that's a better relationship, but not everybody's like that, you know, and so I think you have to just feel out what works for you, what works for them, and then set that expectation. And if you have a number of advisory board members, like, you don't have to interact with all of them individually. You could even have a meeting where they all come together and they brainstorm with each other, you know, and that's probably nice for them to meet other advisory board members too. But I've seen portfolio companies do that or not do that. It's whatever is valuable to them. But I've had fun in advisory board meetings where it's just, you know, a small group of us and we're all just brainstorming about how to help the company. And again, there's no, like, different from the board, because we're not making decisions. There's no minutes being taken. This isn't a fiduciary responsibility, but it's a pure strategic session of like, you know, people who care about the company, and we're all like in it together. So I think those are probably the big things. The only one or two things I would add on that front is that I think advisory boards also don't get enough credit for being test grounds for the entrepreneur for formal boards. Meaning that, you know, let's say that you're a high growth company and, you know, you do anticipate raising outside capital, and maybe a VC comes in and they take a formal board seat. Well, as you grow your company, you also have to grow your formal board and pick people to maintain your majority vote. You know, so for example, like if you're a sole founder and a VC comes in and takes a board seat, then you probably want to add another formal board member that's on, you know, your side to maintain majority vote. And if you've already tested someone out in an advisory board role and you feel like, you know, they get you and, you know, they vote alongside with you and you're simpatico, like maybe that's a nice person to tap into a board seat too, you know? So that actually happened to me with one of my my advisory board companies, is that I was an investor, I was an advisor, and then when she formed a formal board, she asked me to join that too. So I think that was only earned after being, you know, alongside her for a long time and standing up for her when other advisory board members or investors tried to do bad things. And I think we built a trust, and then she wanted me on the board because I think she felt like the strategic advice would be helpful, but that it wouldn't be a vote that would turn on her. And so I think that's something just to think about too, in terms of best practices, thinking ahead, testing out relationships. So those are probably the big things. The one thing that I would add to the end of this here is that I am a huge proponent of advisory boards, especially for people of color and women entrepreneurs. As Melody mentioned, I'm especially passionate about women entrepreneurs, and in fact, I formed the whole Point 25 initiative around helping women build advisory boards. I think women entrepreneurs are particularly great at really taking a lot of value out of their advisory boards, because I think it's natural for a lot of them to really collaborate with other people and to ask for advice and to, you know, pull people together in group meetings and not just to put them in pitch decks to say you've got some big CEO's name. Mm-hmm. But I also think that, you know, coming back to some of the things that, you know, Teak rightly wanted me to stress in the very beginning is that, you know, sometimes having an advisory board of diverse people and bringing them to meetings with you can often open doors that you may not be able to open yourself, right? And so, you know, sometimes if you're a younger entrepreneur, bringing someone that's older with gravitas from your advisory board, or someone that's from the industry, or, you know that like, if you're in one of these situations where you're a person of color or you're a woman, like you're working so much harder, you're being held to like higher standards. And so like having an advisory board member that helps you up your game and makes you like even that much stronger going into a meeting or giving you a reference is so powerful. So I would think about that too, in terms of like, you know, and I don't think a lot of entrepreneurs take full advantage of the advisory boards for that reason, but I would think about that as what, depending on what industry you're in, if you're getting pushback in certain areas, if you feel like you're not connecting with potential clients, maybe they're a different demographic than you, maybe they aren't giving you the respect that you deserve, is there someone that maybe is more of that profile that can be part of your board and be your team member to take that issue off the table? I remember there was a woman who I know who is at the Innovation Center at NYU, and she and her husband ran a business together. And she was like, look, like we would go into meetings and sometimes like they would want to talk to him and sometimes they'd want to talk to me. And we didn't really care as long as we got the business done. But that's just the way things work, is sometimes people tend to be in relationships, you know, better with one person or another founder or whatever. But, you know, having a very influential board backing you, giving you that gravitas, bringing them to meetings, and really like being there for you in case anyone's subjecting you to higher standards can be very powerful. So I'll say that on that front. And I know we have about 8 minutes left until 8, and Teak had asked me to chat a little bit about, on a separate but related note, funding. So what I wanted to do very briefly is just from an investor's perspective, tell you like a short list, and this is kind of, it's in line with like what you would see in a pitch deck, but it's kind of the main points that investors look for, a snapshot of the big things that are important in evaluating a business, right? So I'll go through that quickly. So first, understanding very clearly and succinctly what a business does. And I know this sounds obvious, but I can't tell you how many times companies pitch investors, and like halfway through the pitch, the investors still don't know what they do. Or the description of the company is so vague that you're like, I don't know what you do. You know, and so I always kind of joke around. It's like the entrepreneur that comes in and they're like, we're redefining the way people communicate. I'm like, what does that mean? I don't know what that means. Like, you know, like, so it's just like, or like, we're redefining, you know, the mental task of A to B. And I'm like, I don't know what you do. I don't know. So like, I think just coming up with some kind of succinct statement that says like, we, you know, build widgets and that widget makes the car, whatever, I don't know. I mean, just being very specific, like we make teddy bears and sell them to children, or we, you know, we have this technology and it enables people to communicate with each other 10 times faster, or whatever. With that, you know, just being very specific about the description. I think most investors will tell you if they're looking at companies, they want them to be highly scalable companies where, you know, assuming from the time they invest to the time that they get their money out, that it's some like, you know, 10 times multiple of their initial investment, meaning that, you know, the company has the potential to grow and scale and become this big company. And not only is the expectation that the company can grow and become big, but in order to do that, they often have to be growing within a multi-billion-dollar market, right? So investors are looking for, the example I often give is not to invest in the local restaurant, but maybe the software that would be in all restaurants, right? There you have an example of like a multi-billion-dollar market. Restaurants all over the world could be your potential customers, and you could grow, you know, as your client base grow. I think investors also want businesses that their products aren't easily replicated, you know? So if you have exclusive relationships with suppliers or patents or something that's like some special sauce with technology, just something that's not easily replicated. They want to know what your competitive advantage is. They're also going to want to know like all your major milestones to date. So if it's an early stage company, you know, maybe you're generating revenues already, maybe not. Maybe it's user growth. Maybe it's like significant strategic partnerships, whatever it is, like all the major milestones in the business, they're going to want to hear that very succinctly, and also, you know, really buy into the potential that you have if you've already been able to secure that kind of progress. They want to know who's behind your company. You know, what's your background? What are the backgrounds of your team? Why do you work together well? Have you worked together before? How does it all build, you know, pull together to be a great team for the company, for what you're doing? They're going to want to know how you fit into the whole competitive space. So beyond just your competitive advantage, like how do you compare to the other person that's offering a similar service, and why are you better? So give them a sense of like how you fit into the broader market, how you're reaching customers. So sales and marketing plan, that can be, maybe it's salespeople you're hiring, maybe it's referral plans, maybe it's social media, you know, maybe it's brand ambassadors, whatever it is that you're doing to get the word out, to acquire customers. They're going to want to know how you think through that too. Obviously, if you're fundraising, they're going to want to see financials. They want to know how much you're raising. They want to know how they're going to get their money back if you expect the company to be acquired at some point. And, you know, along the way, they're probably going to want to ask, like, what's your big vision? You know, where do you want to take the company? They want to buy into that. They want to think about who you're targeting as a customer, you know, distribution, pricing, margin, all of those things. So that's a very brief overview. As promised, I just throw that in at the end. But those are some of the big things to think about. You know, if you are thinking outside funding, those are all the key components in a pitch deck. Those are kind of, the big things that any investor would dig into on the due diligence side. And then also, to the extent that you're just thinking strategically about your company, even if you never want to take an outside funding, it's probably a good mental exercise just to go through those things, to think about them yourself. Like, what are we doing in sales and marketing, and what else could we be doing? Or, what does our team look like now, and how could we build it going forward? Or what's our competitive advantage? It's a helpful exercise, I think, regardless, because you're applying the same discipline that an investor would use, basically using a mirror on yourself and kind of brainstorming about how you can be better. So I think we're at time, which is good, because this is the first time I gave the advisory board talk, so it just seemed to work out. And so I guess now, should we go into questions, or what do you guys want to?
Yeah, I'll start with one question and a reiteration of what you've talked about, and then you can kind of take a look through the array of questions and try to get to some that especially are kind of most broadly based. But first, I want to say, of course, thank you so much, and both for the general presentation, also the framing that you closed with, and for the participants, this is a big part of how it'll be part of your life in the weeks ahead. Is, again, whether or not you're considering raising money now, whether you maybe never see yourself doing that, having these kind of fundamentals, these tough questions, asking yourself and really holding that mirror to yourself and your company, that, we want you to do that. We're going to push you to do that throughout the weeks ahead. And many of the things that were talked about, we'll review more in depth, with having a whole webinar around what your exit strategy is and what that looks like, having a whole webinar around how do you engage a banker or a private equity professional on what they need to see specifically for their type of capital. So again, thank you for that framing of, regardless of whether you're fundraising or not, having that mirror, holding that to yourself and internally to your company. A question that I have, so the question, and then I'll give you maybe an aggregate profile of entrepreneur that you can answer the question specifically. But the question being, where would you start in regards to an advisory board? And maybe if this kind of hypothetical entrepreneur were maybe kind of like one of ours, let's say, so, $5 to $10 million revenue, you are this person, and many of you I'm thinking of you generally as a community, you're leaders in your community, you're seen as experts, both in your space and by many others, Latinos and otherwise. And so oftentimes I think you're assumed to know everything, right? And maybe you're on the cusp, you have a corporate contract with one of the big corporations in your region. You don't have an advisory board formalized, but really wanting to look to how do I take the company to the next level, to double revenues in some time, to really be able to grow from regional to statewide, from statewide to national. And so there's a pride there, which I love from all of you, and which we have in all our entrepreneurs, but also then how do we navigate that, especially if you're building a board and relationships from scratch, when so many of our folks have to be experts, are perceived as experts in their region and their space. I don't know if that makes sense.
Yeah, no, it does. I mean, look, I think this is a really valid question. And I have to tell you, I hear this in the startup world with women. So for example, I was just talking to a fellow panelist this morning where we were saying that some of the women entrepreneurs that we see, whether they get to the point where they're like 60 million in revenue, or maybe like a 5 million raise or something in certain regions of the country, LA or Chicago even, they don't have the next woman to look to and to be like, well, I need, the woman who's now at 250 million revenue, and I don't have that, right? And so I think that it's tough for them, because they look around and they're like, it's me, like everyone's looking to me and I need help. I need to get my business to the next level. And so I think, my advice would be definitely look outside your region. Certainly just admit to yourself first that we always all have more to learn. And I also think that there's a lot of value in thinking out of the box in terms of like the type of advice that you could get. So for example, in the Young Presidents Organization, when they put people in like smaller groups and they all like communicate with each other and help each other, people are coming from all different industries, but that's precisely what can be so helpful to them. Like when Sarah Blankley joined the Young Presidents Organization, she was paired up with all these other guys, and they weren't selling Spanx, but she learned from them because they were coming from different industries. They still had things that they could share with her in terms of like marketing and how they scaled their company and helping prepare her. So I would say, like, definitely look outside your region. Don't be afraid to look into totally different industries, because a lot of times it's that outside perspective that can really help. And I would like shoot big, because again, with advisory board relationships, like if let's say that you're someone who's like really dominating your industry in a region, well, maybe the next step for you is to think about people who serve on publicly traded boards that are like that level of institutionalization, and that can give you the perspective of like sitting on 3 or 4 different boards of publicly traded companies. And that's just really great experience for you. So I would just say, like, think very big, think outside of your area, think outside of your industry, and just look for people that you think are like just super smart and can really challenge you, and don't be afraid to be challenged about it too. Because I think part of it is like, just getting out of that comfort zone and getting advice and asking for help.
Gotcha. And a few of the questions are coming back to or clarifying things that you've already answered. And quickly, I'll try to look at some of the broader ones, I think. And Daryl, especially your question, a little more specific. So we'll try to get to it by the end, but if not, then we'll find ways to get your response and different responses. But the first kind of general theme, what have you seen be most successful in terms of compensation? You talked about, for especially technology companies, the basis point or 0.25% or 0.25 in terms of equity. For firms that are not structured that way, you talked about potentially monetary compensation tied to kind of an hourly, but what have you seen most successful and what resonates? I know it's situation by situation, but what have you seen really work in that sphere?
Right. I mean, look, if you're doing cash and you do some kind of like month to month arrangement and they're not helping you, then just stop paying, right? I mean, that's I think pay for performance came up as one of the things. So you should just structure your contract like that. And I think with equity too, you have to be mindful of like how long the contract is. And so that's why I was saying maybe it makes sense to do a year, so that if it's, you don't want to renew it, you don't renew it, or maybe you've grown past the point where that makes sense. I should add though, the 0.25 I throw out as like just a, kind of a suggestion. The truth is that it really does depend on the person too, and the time they're willing to give. So for example, like if you were this kind of high growth company and the CEO of Microsoft offered to be on your advisory board, like you are definitely paying that person more than 0.25%, like yeah, someone like that would probably get a couple points in your company. Like that would probably be like 2-3% of your, just because it's so game changing, like it would redefine your whole company. So I think like you have to use your judgment. The more senior and influential the person is, the more they could potentially command, but the less time they're willing to give you also changes the equity, on the other end. So you just have to, you have to kind of wait it out. I mean, I personally, like, I guess I've done this so many times. Like for me, I don't know if 0.25 would be as attractive, just because I know how much time I spend. But I think another person might, say, well, I don't spend that kind of time, and so that's fine. It just depends. So I just want to make sure that like people don't feel like I was saying that is the number. That's just it's a good number to use, because it's oftentimes a pretty good time commitment, nothing crazy, and also someone who's relatively influential, but maybe not one of these like, huge names that's all in the press.
Yeah, no, I appreciate that framing. As we look to other questions, want to stay for this next one on this notion of the advisory board engagement. So you mentioned things like once a month in a specific forum, or potentially quarterly, having the board convene. But especially for folks that don't have a formalized advisory board, how do you think the mechanics of kicking that off, of an initial gathering, or have you, what are some things, especially for folks that would just be forming and launching one, what could work in terms of how often to meet and how to set that up?
Right. I mean, I would still use those guidelines, to be quite honest with you. I think before you ever engage an advisory board member, that's exactly what you have to talk about from the start, what your expectations are. And I think that like a month, an hour a month at a minimum is totally, absolutely a fair ask. I think how you do that, whether it's in person or whether you're setting up a phone call or whatever, like I think that's normal. And I think if it's like you mentioned, maybe you do quarterly meetings as you build the board and you bring everyone together. Maybe they dial in or maybe they're in person. But I think those are, pretty standard requests from the very start, like from the very moment that you first bring someone in.
Gotcha. And yeah, another question on that note of engagement. So in terms of communication, obviously there's kind of all the ways that you mentioned. One thing that I've seen folks be successful with is a monthly update or newsletter. Have you seen any of your mentee firms and CEOs do that well? And if so, any guidelines on what that kind of just email update could look like?
Yeah, I mean, I see this more so when someone's brought in outside capital. And in fact, I did write an Inc. article on this, so maybe I could send that link to you too, but it's basically like the 5 things that you should include in an investor update. Mm-hmm. With that said, that's a kind of update that like you could easily share with the rest of the community too. I mean, the one caveat I would say is investors want to know how much cash you have left at any given time, right? They want to know your burn. Maybe you don't want to share that with everybody, but for the most part, it's the same type of stuff where you're saying like, here are the major milestones, here are the big challenges we have, here's where we need your help. So maybe I'll make sure to send you that link. And so what I would say is just think about that as like a guideline for investors, and then maybe you take off something that's like sensitive on the financial front for a broader update. But I think it's basically, giving people the story on what you're doing, the metrics you're holding yourself to, but then also where they can help you. And I will say this on the one front of helping is that I would encourage entrepreneurs when they do ask for help to be very specific about the help that they need, meaning that if you just send an update and you're like, oh, we need press coverage, does anyone know anybody in the press? Like, you will never get good responses with that. But if you actually do your homework and you say like very specifically the journalist you're looking to contact that covers like your beat at whatever journal, or whether you are trying to get on one specific show, like that is the best way to ask for people's help, because otherwise people are just like, I don't know where to start. So if you're like, oh, I just need a senior contact in the energy world, like it doesn't really help people. But if you're like, does anyone know anyone at Shell? Then people are like, I do, my friend so-and-so works there. So I would like just make sure that as you think about those updates, being very specific with your asks and your requests from people, is like, that makes a world of difference.
Great.
Gotcha.
Great.
A quick and something I wanted to get to while we have you, and it was just a new question in terms of, even if just briefly, should the advisory board be covered under some kind of insurance policy or liability? Just any thoughts there, brief?
No, because again, this isn't anything where they're taking on. So unlike the formal board, and this is a good question, because again, this is like, people get confused, like the difference with boards and advisory boards. And the board, of course, yes, like the formal board, the board of directors, you should have D&O insurance. The board of the directors should all be indemnified, because think about on the formal board, let's say that they vote on like a restructuring plan, or something happens, like, or there's like a data breach like we see in the press, like they need the indemnification, because they could have shareholders trying to sue them personally, being like, you were voting on these plans, like you could have prevented this from happening. That is not the case with the advisory board. You do not have to worry about D&O insurance, because they're not doing anything formal like that. They're not voting. They don't have any vote control in the company. Again, the only relationship they have is with you, the entrepreneur, where they're just saying, I'm here to give you advice, and you're asking them for advice. But the relationship is up to you. And it's no like legal ability to like overthrow you or like make any decisions in the business. They are specifically there to be helpful to you and give advice. So good question. And that again, just highlights the differences between the two structures.
Awesome. Thank you, Alicia. And I see a lot more questions coming in, but we're running short on time. So if you guys can forward those along, and Alicia, maybe I can send you the consolidated list and we can maybe get back to them on some of these questions. But just for the sake of time, want to make sure that, we're respectful for, I know it's 8:12 over there in the East Coast. So we will make sure to get back to your questions. Just make sure to forward them along to us. So
well, it sounds like someone was also dialing in from London, so they have it worse than I do, so.
Oh my God, yeah, we saw that. But thank you again so much. Again, always so much insight. I was taking notes. Really, really, really good. We got great feedback on the chat and then some questions as well. So with that, I want to go ahead and give you guys a couple of reminders for the week. Congrats on the first week. Your homework was due earlier today. Will be due every Wednesday. As you know, webinars are going to be on Wednesday at this time, Pacific Standard Time, 4 to 5. And just a quick reminder, kind reminder to make sure to complete the intake survey that was sent out by, I believe, Alice, and I believe Mark sent it out as well. But please make sure to complete that if you haven't done so already. And if you need the link, please let us know. But just remember to check your emails every Monday, similar to the email I sent about an hour and a half ago with more details for the week. And there'll be a lot more details in that. And then we will be providing a link to these webinars, a recording in the following weeks. So look forward to that. And I have nothing else to add. Do you have anything else to add?
If you have any parting words, thank you so much for kicking off the webinar series. And as I know you mentioned, so many of the companies, firm CEOs that you mentor are in the technology space, but there's so much that's broadly applicable, and appreciate that. But if you have any parting words, and then we can send folks on their way.
No, I mean, I would just wish everyone the best of luck. I'm going to follow up and send you guys some of the links that I mentioned, so you can feel free to share them with everyone. And it's always an honor and privilege to be part of your growth and progress. And I just hope you have a great time in the program. They work hard for you, and I look forward to being in touch with you guys again very soon. So that's it. Thank you.
Awesome. Thank you so much. Okay, everyone. We'll see you next week. Bye.